Welcome to The Interest. I'm Christine Stewart. Happy Monday. Bill Bodnar is back with a hot take on the economy with Master the Markets, and our own Vincent and Andrew Berman strap back on the gloves for another cage match. Will Andrew finally land a knockout punch? But first, the state of Florida has cracked down on borrowers from communist countries. What does that mean for loan originators who do business in Florida? We had the chance to talk to several non-QM authorities who do business in the state about the situation.
There are definite positives from a nationalistic side of this, and that's completely understandable. The one thing that we have to be smart about is, do we want to stifle investment in the United States?
Amidst the changes, Chinese citizens with non-tourist visas are restricted to owning one home or less than 2 acres of land, at least 5 miles away from airports and other critical infrastructure.
I think, borrowers have a ton of options, and whether you're Chinese or Filipino or any, ethnicity around Asia or Europe, you have an opportunity here in the United States to buy property as a foreign national. So I say, don't limit your markets. Do what you think is going to be best for you and your family.
Mortgage companies who do business in Florida are now taking steps to ensure they are vetting all potential borrowers.
We're just going to prevent ourselves from making loans that break the law. So that's my important goal.
Several groups are challenging the ruling in the Court of Federal Appeals, saying the measure mandates egregious national origin discrimination. The question on everyone's mind is, will the U.S. ultimately block foreign investment from communist countries?
The federal regulators determine the same, then I think that becomes more of a bigger issue than a state-specific ruling. So at this time, I'm not overly concerned until the federal government makes it more prohibitive.
To read more about the issue, go to Florida Originator Magazine. Reporting for The Interest, I'm Christine Stewart.
Angel AI is revolutionizing the home financing process. Here to tell us about it is Pavan Agarwal, the CEO of Celigence, the company behind this new amazing app. Tell us how Angel AI is helping the home financing process.
We use empathetic AI technology, so Angel AI understands the emotions behind human inputs so that the application to approval to close of a mortgage is nearly free of human touch and free of human error, and is lightning fast compared to the manual standards of the real estate industry today.
What about the people who have found it hard to get a mortgage?
Angel AI has made the approval process for mortgages fair and transparent, such that we have cut the decline rates for minority communities by half relative to the national average. Just go to angelai.com or click the Ask Angel AI Now button and ask Angel AI your home finance questions, or simply ask her to send you one of these cool free t-shirts. Angel AI has transferred the home financing business and made it fairer and easier for everyone.
Hey everybody, thanks for tuning in to our Master the Market segment. So last week we call a period of consolidation, right? We had a couple of weeks where bond prices were soaring, interest rates were coming down. And so last week, the bond market kind of took a week off, kind of moved sideways. A key level to watch as a mortgage and housing professional is 4.5%. It is absolutely stopping yields from improving, and so it's a floor. The good news is, above us, 5% was a ceiling. Now that ceiling has moved down to 4.80. So we're in a range between 4.5% and 4.80. So use that as numbers to watch very, very carefully. This past week, we had Treasury auctions go off. They were okay. We were able to sell the bonds without having to incent people with extra yield. So that was a good thing. And a lot of the Fed speaks a little softer. A lot of the Fed officials are out talking about, hey, we need to be careful raising rates and doing more because long-term rates going higher is already doing the job of the Fed. So that was kind of the tone this week. And so now this week, though, the big deal is going to be inflation, right? Some of the numbers over the last couple of weeks, the jobs report at the beginning of the month and some of the manufacturing numbers are showing weakness. But now we're getting to this inflation number. And in our eyes, if that inflation print comes in at or beneath expectations or shows another decline, maybe because of the shelter component finally hitting those numbers, wow, I think the bond market could really blast off. And so there's a lot to watch, folks. There's still a lot of people betting on higher rates, right? They're short selling. They haven't been doing very well, but they maybe have another day if that inflation number comes in hot, because that means, the rates are going to move higher, and those betting on higher rates are going to win. So we got to watch all this stuff carefully. Listen, have yourself a great week, and we'll be talking to you soon. Bye for now.
Okay, so Vince, are you bullish on the future of the real estate agent?
I am. I know not a lot of people are. They think that there's some big changes coming here, and all of a sudden we're going to be wiping out all these real estate agents, and they're not going to be as necessary to the process as they have been in the past. I just don't buy that. I can't see where that's really going to happen.
Okay, so why is that? Why do you think actually, because first off, we know actually that volume is not going to increase, volume is going to decrease, and most real estate agents are barely getting by. And the ones that are getting by have the benefit of being the buyer's broker. Well, they're losing that. So please tell me, where is this mystery
I love the way you just
you think real estate agents.
You have come to a conclusion that buyer's brokers are going away all of a sudden, and that's not going to be a case anymore. I absolutely disagree with you on that. Here's the thing, and when we talk about the future, do we mean the next 6 months? Do we mean the next 2 years? I'm talking 5, 10 years out here. You know what? Listen, I am an old man. I don't know if you've noticed, I'm an old man. I've been around. I was covering real estate, what was happening with consolidation in real estate agencies back in the mid-1980s, where everyone said there was not going to be any small real estate agencies. There weren't going to be any mid-sized real estate agencies. It was all going to be giant behemoths. And we do have a lot of behemoths out there, but we still also have a lot of mid-sized agencies that are out there and some smaller ones that are still working here. Well, real estate agencies did not go away.
Oh no, they're still there, but
they're not going to go away now.
You have a lot of real estate agents that are there. The numbers are there, no question about it. But they're doing no business. They're doing no business, and
right now they're not. Right now they're having a hard time doing it.
Why?
But that's listen, that happens. We all know this is all cyclical. Things go up, things go down.
No, it's just
very
sick.
few.
It's not cyclical. It's just sick.
Well, if you don't think it's cyclical, then you think the entire industry is going away completely, and we all might as well.
Whoa! Hold on for a second,
because you can't.
The entire industry.
You said there's no business, not there's no agents. You said there's not going to be any business, and there's a big difference between whether or not there's business versus whether or not there are agents.
You know something? I think actually it's going to happen with larger teams. I think actually the big real estate agents are going to get more of that business, and I think actually you're not going to like this, but loan originators are going to drive the business to real estate agents.
Oh, that's no.
I don't see
that as the major shift. You think there's a big demographic shift or some business shift that's going to move these over.
All of these little things that make me actually put. If I'm going to be betting on real estate agents,
of history is what you are. You are no student of history or human nature. You know why? Because when you take a look at consumers
or evolution, because listen, that I'm actually not a caveman, and does that mean because if you're saying history repeats itself always, well then I would be hunched over.
I'm saying they said history doesn't necessarily repeat itself, but it does kind of rhyme. And that's the same kind of situation. Here's the situation. Here's what we've got here. You got all these people who say everything's going to change, everything's going away. It's not going to be a big deal for stuff. We see this all the time. We've seen it with real estate in the past. We see it with banks. I can't tell you how many times you're told the digital revolution is going to do away with bank branches, except if you look at every single study right now about consumers, including millennials, and their desire to go to banks, they want branches. Because as much as they like the opportunity to talk to people and to talk to bankers and to do stuff online so they don't have to go in, every now and then there's a big financial thing that comes up and they go, I would like to see somebody. And they want to know that there's a brick and mortar place and people standing there. But that's on banking, and the same thing's going to happen with real estate. The same thing's happening.
Are there more branches
mortgage
or less bank branches? If we look at today, are there more bank branches or less bank branches?
There's certainly,
let's say from 3 years ago.
There's certainly fewer bank branches than there were.
Okay.
That doesn't mean, but there's two things. One, because there are fewer banks than there were. So a lot of them have sort of consolidated the banks. You still have
Thank you. I appreciate you.
The people who on the bank branch side apparently we're probably listening to people like you who said you should just close them all down instead of doing the studies and doing the research to find out that maybe you shouldn't close quite as many.
Millennials
they might need to change. They might need to change the way this thing looks. It's the same thing with real estate agents, with LOs, with mortgage origination. Listen, you can do an awful lot of this stuff online. You can easily go and say, I'm going to do a search. I mean, I know I've known several people who were in the market the last couple of years. Everything they were doing was on Zillow. And they said to themselves at the end of the day, why am I using a real estate agent? Because
100%.
I can see it all.
Thank you. See, right there.
Except they did.
You don't need you need your mortgage person to tell you how much you can afford. You need your mortgage person to tell you actually.
You don't need a mortgage person to tell you how much you can afford because it's a calculator. You can literally do that all online.
Yeah, but those financial decisions are very different than knowing if you want to go from a detached
I do not know how you can divorce the financial decision from the decision about what kind of property you're going to buy. You need trusted advisors on both of them. Listen, Andrew, you can yap about this all you want. We're out of time. So is that argument. That is a loser argument. I declare victory.
No. You don't get declared victor on this one. No.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.